Assalamualaikum warahmatullahi wabarakatuh. So today I will be presenting about Axiata Group Berhad for Financial Accounting and Reporting 2 Group Assignment. So for introduction, Axiata Group Berhad is a leading player in digital and telecommunication sector in Malaysia, ASEAN and South Asia. Axiata provides mobile services, interconnect services, broadband services, sale of devices, and telecommunication infrastructures. Axiata was given 2 awards by NACRA, which is the first one, Excellent Award Gold, for companies more than 10 billion ringgit in market capitalization. And the second award is Special Award Silver for Best Sustainability Reporting. The auditor for Axiata Group Berhad is PwC, Pricewaterhouse Company. The 5 top largest shareholders for Axiata Group Berhad is Khazanah Nasional Berhad, second one Permodalan Nasional Berhad, third one Employees Provident Fund Board, the fourth one Kumpulan Wang Persaraan, and the last one is the Vanguard Group.
Property, plant and equipment are tangible assets that are recorded on the balance sheet and represent the accumulated profit over time. These assets include items such as machinery, equipment, vehicles, buildings, land, office equipment and furniture, all of which are essential for the daily operation of a business. PPE is crucial for financial planning, analysis and investment decision as it directly impacts a company's ability to generate revenue and sustain operation over the long term. The costs associated with these assets include the purchase price, import duties, non-refundable taxes, and expenses related to their setup and installation, including asset retirement obligations for the essential demanding cost. Furthermore, land is a special case with PPE as it typically does not depreciate over time. In contrast, other PPE assets such as machinery and buildings are subject to depreciation. Depreciation represents the reduction in asset value due to wear and tear or obsolescence, and it is reported as an expense on the income statement. This process helps allocate the cost of an asset over its useful life. PP is also crucial for long-term investment decision as it reflects the company's capability to expand and improve operations, contributing to the overall financial health of the business. The useful life of assets varies depending on their type and purpose. For instance, land is not depreciated due to its indefinite lifespan. Buildings, on the other hand, have useful life ranging from 8 to 40 years, depending on the construction and usage. Telecommunication equipment has a shorter useful life, typically between 2 to 25 years, reflecting the rapid advancement in technology. Movable plant and equipment generally have a useful life of 3 to 10 years, depending on usage and maintenance. Computer support systems are also subject to rapid technological changes with a useful life ranging from 2 to 10 years. Finally, capital work in progress is not depreciated until the assets are ready for their intended use. This different useful lifespan ensure that depreciation is calculated accurately, reflecting to wear and tear or obsolescence over time. As of December 31st, 2023, Axiata Group Berhad's property, plant and equipment totally 27,439,783,000. The breakdown of this asset is as follows. Land is valued at 25,095,000, while buildings are valued at 209,600,000. Telecommunication network equipment, which form a significant portion of company's asset, is valued at 24,382,084,000. Movable plant and equipment are valued at 315,093,000, and computer support system are worth Rm 524,752,000. Capital work in progress representing ongoing projects amounts to 1,983,159,000. The total depreciation for this asset is 4,632,770,000. Depreciation incurred for telecommunication network equipment 4,103,435,000, and computer support system 356,460,000. The net book value of this asset after accounting for depreciation stands at 22,872,525,000. Notably, land and capital work in progress do not incur depreciation, reflecting their long-term nature and the fact that they are not yet fully operational assets.
Intangible assets by Axiata. So the first one will be the human capital. Human capital is a primary focus with initiatives like the Excellence Program designed to develop leadership among middle management. This program, in collaboration with Melbourne Business School, combines experiential learning, coaching, and project-based assignments to cultivate thought leadership. The second one will be the organizational culture, which is by promoting employee well-being through comprehensive health and safety initiatives. Axiata's focus on creating a supportive work environment is evident in its commitment to mental and physical health, ensuring that employees feel valued and secure. And the last one will be customer relationship, which is important of customer relationship as an intangible asset. By enhancing customer experience through targeted training programs for employees, the company aims to strengthen its engagement with stakeholders and improve service delivery.
Investment properties refer to real estate assets that are purchased primarily for the purpose of earning income, capital appreciation, or both rather than for personal use or occupation. These properties can be residential, commercial, industrial, or any other type of real estate that generates a return through rental income or long-term appreciation. The reason many choose to invest in properties is that they offer various financial benefits, including steady income streams, the potential for capital growth, and the ability to hedge against inflation. In addition, investment properties can serve as a solid and diversified asset class within an investment portfolio. When examining Axiata Group Berhad, it's important to note that the company does not currently own any investment properties. Instead, Axiata focuses on its core business operations, primarily in telecommunication and digital services. While Axiata does not invest in properties for rental or capital appreciation purposes, such investment typically benefit investors by providing passive income, tax advantages, and long-term asset value growth. Examples of investment properties include land held for capital appreciation, properties leased to others, vacant buildings for future leasing, or even properties under construction for investment purposes. Biological assets are defined as living plants or animals, including livestock, crops, and other living organisms that are part of agriculture activities. Under the Malaysian Financial Reporting Standard, biological assets are subject to a specific accounting and reporting guidelines, particularly focusing on agriculture activities and biological transformation. The key component of biological asset under MFRS 141 include the identification, measurement, and disclosure of such assets in financial statements with a focus on their transformation over time. However, it comes to Exitia Group Berhad, the company's business operations are primarily centered on telecommunication and digital services. Exitia does not engage in agriculture or farming activities, and therefore biological assets are not part of its operation. As a leading telecommunication provider, Exitia focuses on providing mobile services, broadband, and digital solutions across its markets, which makes biological assets irrelevant to its financial statements. Thus, while biological assets are a significant category in some industries, Exitia's business model is not involved in such activities.
Axiata reported 25.1 billion ringgit for the fiscal year, which represents 10%, and also 22.5 billion, which also represents 10%, and the remaining 2.6 billion is also noted for the increased revenue of the company. So how to get is 25.1 billion minus with 22.5 billion, and you will get 2.6 billion as the revenue for the company. There will be a calculation in this slide. So overall, Axiata's revenue statistics indicate a strong performance and a positive outlook for continued growth in the telecommunication sector. Axiata disclosed total lease among 5.2 billion ringgit and corresponding right use of asset value 4.8 billion ringgit, which reflects the company's commitment to transparency regarding its financial obligations and asset utilization. Moreover, Axiata's strategic management of these assets allows for increased operational flexibility, enabling the company to adapt quickly to market changes without significant capital expenditure on fixed assets. By leasing equipment and facilities, Axiata can allocate resources more efficiently towards growth initiatives and technological advancement. In summary, Axiata Group Berhad these assets represented by significant right-of-use assets and liabilities play a crucial role in its financial strategy, contributing to operational flexibility and transparency while forming a notable percentage of its total asset base. So there will be a calculation of percentage of lease liabilities equals to lease liabilities total assets times 100% of lease liabilities equals to total assets lease liabilities times 100%, and the calculation will be the percentage of lease liabilities is equals to 5.2 billion ringgit divided by 40 billion times 100% of lease liabilities, and it will get 13%.
Now we'll be moving on to the accounting policies of Axiata Group Berhad. There will be 3 key points that I'll be talking about. The first one is the financial statement. Axiata Group Berhad prepared the financial statement according to the Malaysian Financial Reporting Standard (MFRS) and International Financial Reporting Standard (IFRS), and also the Companies Act 2016 in Malaysia. Next is the currency. The financial statement of Axiata Group Berhad are presented in Ringgit Malaysia, rounded to the nearest thousand. The key activities for Axiata Group Berhad financial statement is to review the accounting impacts for merger and acquisition date and revise the policies for better governance. Contingent liabilities for Axiata Group Berhad are not recognized in the financial statement but disclosed if they arise from uncertain future events. For contingent asset, it is not recognized but disclosed if the inflow of economic benefit is probable. In the financial statement of Axiata Group Berhad, there are 3 amendments. The first one is the MFRS 101, Facilitation of Financial Statement and Disclosure of Accounting Policies. The second one, MFRS 108, Redefinition of Accounting Estimates. The third one, MFRS 112, Inferred Tax and International Tax Reforms, Pillar 2 Models Rules. However, these amendments did not significantly affect the financial statement except for MFRS 112. Now we'll be talking about financial instrument, MFRS 9. Financial instrument defines as specific criteria for identifying and quantifying financial assets, liabilities, and certain agreements for non-financial goods. The financial assets classification for Axiata Group Berhad falls into two categories, which are fair values and amortization costs. For fair value, it is measured through other comprehensive income or through profit or loss. For amortized costs, it held for collection of cash flows. Next is the recognition of financial assets. The financial assets are recognized in Axiata when the company wants to purchase or sell the assets. The financial assets are derecognized when the rights for cash flow and/or are transferred. It also will be derecognized when all risks and rewards of ownership are transferred. For financial assets that are not measured at fair value through profit or loss, the transaction costs will be added to the fair value. However, for financial assets that are measured at fair value through profit or loss, the transaction costs are expensed. For debt instrument, the Axiata Group Berhad measured it on the business model and cash flow characteristics. The amortized costs for debt instrument are held for principal and interest payment. The interest income are recognized using the effective interest rate method. The gains or losses from reorganization will be presented in profit or loss. However, the impairment losses of debt instrument will be recorded separately in the statement of other comprehensive income. Now, for equity instrument, it will be measured on fair value, and the fair value losses or gains are recognized in the other comprehensive income. And for fair value through profit or loss, the fair value losses or gains will be recorded directly in the profit or loss. Also, the impairment losses and reversals of fair value through other comprehensive income are not recorded separately. Now we'll be talking about earnings per share or EPS for Axiata Group Berhad. As you can see from the table, the net income for Axiata Group Berhad in 2022 is higher than net income in 2023. However, the preferred dividends for Axiata Group Berhad in 2022 is lower than preferred dividends of Axiata Group Berhad in 2023. So we can see that the main reason why Axiata Group Berhad EPS is lower in 2023 is because the net income in 2023 is lower than 2022. That is all from me. Thank you.
Axiata Group Berhad is committed to a sustainability framework that aligns with the United Nations Sustainability Development Goals (SDGs), aiming to build a greener, fairer, and better world by 2030. The company has set an ambitious goal of achieving net zero greenhouse gas (GHG) emissions across its entire value chain by 2050. As part of this commitment, Axiata targets a 42% reduction in Scope 1 and 2 emissions by 2030. This involves focusing on renewable energy and decarbonization efforts within its operations. Axiata is increasing its use of renewable energy sources in network operations, making strides towards reducing its environmental footprint. Additionally, the company is setting science-based targets for reducing Scope 1 and 2 emissions, ensuring that its sustainability initiatives are measurable and impactful in mitigating climate change. Axiata is also taking steps to reduce its Scope 3 emissions, targeting a 25% reduction by 2030, with the ultimate goal of reducing them by 90% by 2050. This highlights the company's comprehensive approach to sustainability, considering the entire life cycle of its operations. Axiata is also working with its supply chain to ensure that its suppliers adopt sustainability practices further expanding the impact of its efforts.